Good morning, everybody. This is James Pelton here with a live for you today. The project that we're talking about is USPC.io, and it is supposed to be an AMA, but I have not seen the team. Maybe I need to do a better job of notifying. Maybe I should put in my notification emails. Hey, hop on a few minutes early to make sure that when I go live, you're here because otherwise I don't know what to do. But we'll just talk through the project. If we don't hear from the team, I'll just do my best to walk through it as best as I can, and we'll do an AMA another time. So it's good to see all of you. Please hit the like button. Appreciate it. Graham, good to see you. Tristan, Matthias, Ian, Ryan, I appreciate you guys very much. So it's like hanging out with friends or family, each and every day. So appreciate you guys. Yeah, hit the like button and we'll just jump into it. If the team shows up, that's great. If not, we'll just, make do with what we have. Yes, Tristan says, got to check that hair. No, I'm confident in my hair today. I don't even need to check it. No. But yeah, so this is USPC.io. I thought it looked very interesting. The team, they originally just wanted me to do a walkthrough, but I was like, no, come on for an AMA because I have questions. I want to, see what's going on. And they said, okay, we'll come on for an AMA. But then now they're not here. So I guess they're getting what they wanted with me just walking through it. But I ran into this. I thought it was very interesting. Become a fractional owner of an income producing real estate portfolio. So again, I think that's pretty interesting. That's exactly kind of what I was after. Let's watch their video here. This is the guy. This is their CEO. He's not a paid actor or anything. But let's watch their welcome video here real quick. Is this cheating as a YouTuber to just watch other people's videos? Well, whatever. Let's just watch it. Blockchain technology is perfect for real estate. Can you guys hear it? Millions of Americans otherwise cannot afford buying real estate to be part of the real estate. Can you guys hear this okay? Or can only I hear it? San Francisco, other urban areas in the United States, become one of the biggest landlord. We can't hear it. Well, this is going to be boring if you guys can't hear it. So never mind. I'll post a link. You can go watch the video if you want. That'll be pretty boring. It's cool when you can hear it too. So yeah, this was interesting to me because real estate is in general a good investment. Oh, here's Jay-Z himself. Jay-Z, we were just watching your video. Welcome. Glad to join us here today. Thanks for joining.
Sorry for being late.
Hey, no worries, man. It happens. That's what, when you do live videos, that's inevitably what happens. So I appreciate you coming. So I kind of already got the audience warmed up a little bit. I got them excited for the project. Could you start us out by a quick introduction, and then we'll kind of get rolling a little bit?
Yeah, sure. I'm just putting a background up real quick.
Yeah, no worries.
Give me a second.
You take your time.
Are we good?
You're good. That looks super professional.
Okay, great. Thanks. All right. My name is John Zhang. I'm born and raised in China, and I came to the United States about 2012, starting my construction company, then evolved into a development company. So right now we're developing several $100 million developments in Southern California. So during my development career, I also got into finance. So I'm also a chairman of investment banking located in Los Angeles. So I would say I'm pretty familiar with real estate and finance. And during the journey, I'm always interested in blockchain and everything, right? It's just the thing about our blockchain is so good about the digitalization. It's different rail than their financial system. So it's an alternative system. It's 24/7, it's global wise. I really like the technology. The only part I don't like it is there's no intrinsic value behind it. So I was like, wait a minute, why there's no coins out there that has intrinsic value? So I started researching and trying to find anything else out there. Then I couldn't find much. So that's why I created USPC. It's a real estate backed, because I think real estate, in my opinion, is the best asset you can own, and there is the best asset to back a real cryptocurrency.
Okay, very cool. Yeah, no, I totally agree. And this is what drew my eyes to things, is because I know there's people who want to kind of diversify out of just crypto, like you said, with no underlying assets. But hey, we want to get into real estate. We want to get into some other things, and they don't know how to do it. So can you kind of talk about it? Is this kind of like a REIT? Here's the first question. Is this like a REIT on the blockchain, or how does that compare to something like that?
You could say that it's similarity to REITs, because REITs is more like a fractional ownership or real estate portfolio, right? This is exactly the same thing, except REITs is traded on a stock exchange. We're on blockchain. We don't need the stock exchange. We don't need the middleman. We don't need it's like, right. It's the tokens by default is international based. Versus stock exchange, say the REITs trade on U.S. exchange, not is only on Nasdaq or U.S. Export to U.S. is not really accessible to foreign investors too, because as you know, for foreign investors to open accounts in U.S. stock exchange is pretty difficult, right? Another thing about the REITs is the full name is Real Estate Investment Trust. It's actually a tax status you elect as. So by qualify the tax status, you have to give out 90% of your earnings as dividends in cash. And their USPC is actually giving out their dividends in USPC. So a little bit different than giving out the cash dividends. So
yeah,
but for the most part, it's the same. You have their fractional ownership on both USPC and REITs.
Okay. And then how is this going to work? So we've seen other companies that do like an NFT for a specific property or something like that. Is that what you guys are going to be doing, or are you going to just be using
No, because so they're actually using NFT to represent like as a title, right, ownership of a property. But in my opinions, they have a long way to go, because the NFT and the whole blockchain has to be adopted by the governments. Because as we all know, the deed of a property is recorded in each local jurisdiction's county's office, county's clerk, and the government have to recognize it, right? The title company, the governments, no of the right now the mainstream institution will recognize that NFT as ownership. So they have a long way to go to basically make NFT to replace the title chain, right? I think it's good to do it, but it's gonna be a long way to do it. What USPC does is pretty simple, right? It's fractional ownership. Each coin represents a share in a company that owns those real estates. So by owning USPC, you indirectly owns those properties as a fractional owner.
Okay. No, that makes a lot of sense. And so one of the questions people are having is, are they regulated? Are you worried about this being, a security, or what's kind of your status on the regulation side of things?
We're definitely regulated. We're definitely a security token. So back to what I said earlier, when I started doing researching, like why there's not any regulated, legitimized asset-backed token. The reason being is a lot of token right now, like say the Bitcoins, Ethereum, all these other coins, they're not regulated, right? So when people do the asset-backed coins, they have a good intention, but they don't want to be regulated by SEC. So what they did is like, let me find a way to go around it. So there's a lot of coins out there. They're trying to find a way around it, and most of them are not successful. So then they're like, you know what? Let me just geo-block Americans. I'm going to sell my tokens outside the U.S. to the foreigners. We're not going to allow any Americans to buy it. That's what I do, and mostly. The reason being is because if you there's this thing called the Howey test, right? You have to pass the Howey test to basically to make sure you're not a security token, and it's my coins by default. It is, because every coin represents ownership. That's equity, right? That's security. There's no argument about it at all. I kind of passed the first test. So, but there's a lot of other coins that do other tricks, try to go around it. I was like, you know what? I don't think it's a bad idea to be regulated, right? SEC exists to protect the investors, right? So we're being regulated. We're being forced to come up with security laws. I don't think it's necessarily a bad thing at all. So, plus, there's no way around it anyway. So
Yeah, no, that's great. And I just wanted to post a link to, in case people aren't familiar with the Howey test, it's what they use to determine if something's a security. So I posted a link to here if you want to go read about it. Like to educate as we're going. Can I ask then, what's the value of having this be on the blockchain instead of letting, not doing it on the blockchain, just doing it a traditional financing method?
Well, there's a lot of benefit. We actually listed all. I have a whole chart in the white paper. We'll listed this compared to the regular coins, utility coins, and the REITs and all the other things. But the most thing is what I said earlier is first of all, on the chain compared to traditional stocks or REITs or anything else, it's 24/7 trading, right? And is globally, right? Yeah, that's the chart. Yes, and it's international based, right? You're not restricted to a national exchange, right? And the most important part, I think, is the ownership part. That's what the Web3 all about. Is by owning a token, you can have your own token in your own possession, in your wallets, right? You own it, you can gift to anyone peer-to-peer, or you can, trade it on exchange, whatever you want. By owning a stock, most people don't own the stocks directly. Say if you buy a stock on Robinhood owns your stock, right? So you don't own it. If something happened to them, or if they ever go to bankruptcy or something, then you have to go to bankruptcy court to try to get the stock back, right? And that's the biggest part, is you don't own your stock. You have a claim against the brokerage that owns the stock that you have. A lot of people actually invested, I don't know, in GameStop before, and you've heard the news that Robinhood sold your stock, right? Why they can do that? Because they own your stock, you don't own it. That's the thing, right? So being a token owner, the token's in your own wallet. Nobody can do anything to it, right? You're the only one that has control over it. I think that's one of the most intriguing parts for me. Like, I like it. Like, I like to own my own things.
Yeah, no, this is an awesome chart. I think this, we might not even need you here with this chart. We can just kind of go through these. And can you talk about how you expect returns for people to go on this compared to, if getting into real estate themselves or something like that?
Sure, I'll do two comparisons. First, with real estate, right? So in real estate, you have different strategy, right? You have developments, you have opportunistic, like say value add. You buy a property that's fully vacant or very low occupancy, then you value add. Or there's something that's called core, where you buy something that's like mostly stabilized and you just enjoy the rental income, right? So in USPC, because I want every American to be able to hold it as their store of value, as the savings. So I chose the most safe way to invest in real estate. So we're buying only stabilized property, income producing stabilized property in the United States in good areas. That means, the problem when we buy them, there's what income. So there's not a lot of risk, right? This asset class we choose the most going to be multifamilies. So there's people like, for me, multifamily is more like commodity. People need a place to live, right? So that's, for me, one of the safe class of real estate as well. And we're going to basically, buy those properties as much as we can and just hold them as long as we can. We all know real estate's appreciate over the long term. So the longer you hold them, the better return you are. So the return comes in twofold: is the rental incomes and also the market appreciations. And we all know real estate is best hedging against inflation. So when inflation hits, then real estate will go up because of inflation. The rental income as well will get adjusted because of inflation, so they will go up as well. So I mean, I'm not really worried about inflation in terms of real estate, because that's one of the best tools against inflation. So what we do with the strategy is really different. Is we actually, instead of giving out cash dividends, right? So we're giving out stock dividends, right? Like in USPC. So what we can do is, when the cash we collected from the rental incomes, we're going to use it to reinvest into my other properties. So that creates something called the compounding returns. And the compounding returns, according to Warren Buffett, is the eighth wonder of the world. So over the long term, the compounding return will give us so much returns that I'm pretty confident we can outperform a lot of the REITs out there. Majority of the REITs, other investment vehicles out there in real estate. And back to a comparison with the crypto, I would say that regular cryptocurrency, because they're not backed by anything, so they have a lot higher potential to grow, right? But they're also really risky as well. You don't know if they're going to go up or no, because there's no fundamental you can analyze, right? So it's all based on supply and demand. So I would say USPC will come in as an alternative investment where it's safe, it's reliable, it's going to appreciate over the long term, right? So people feel safe to park their money here, majority of their money here, the savings here. Then you can still invest in other asset classes for their high risk, high reward kind of type of investment.
Okay. Could you talk about how it works from a tokenomics side of things? Like how, people are used to, like you said, receiving dividends. You kind of mentioned, no, it's going to go into, can you kind of talk about, like, if somebody puts in an investment, how this will work tokenomically?
Right. So we decided to have a maximum supply of 1 billion token. That means we don't. So that means the token itself, we're not allowed to issue more than one token, right? And when people invest, say they buy coins, that would mean that, or the buy, say we'll start at $1, right? Say when they put the dollar in, then what means one coin? So for 1 billion token, we're implying about 1 billion assets, right? We're going to buy. and the tokenomics show like how we're going to release them in different stages. Right. We also have a liquidity pool we reserve to buy back the shares, so that is ensure that if anybody who's bought a stock and can't sell them for whatever reason, we'll be able to buy it back.
Okay. So is this kind of intended then to be kind of a stable coin of sorts, or is that not really the intention? Because it's going to be backed by real estate.
Yeah, so it'd be relatively stable. If you look at the white paper, the first paragraph we actually talk about the stable coin is really not that stable. We actually wrote it, published this back in January before Luna crashed, right? Before the inflation, everything happens. So the reason why we say that because stable coins are typically backed by US dollar or fiat currency like US dollar, and they're not really going to hold their value against inflation. That's why we're saying that it's not really stable, because you think the face value is there, but the buying power goes like less against inflation because it doesn't really produce any returns, right? So I like something that produces returns. But real estate is the one that gives the passive returns, right? So we're not 100% stable coins because there's still fluctuation in the short term, right? Because the value of real estate does change depending on people's opinion, right? People think it's higher, people think it's lower. So I would see probably fluctuation on the price in USPC. However, because of that, so there's also higher chance for you to get a return. So if people all think USPC is the next big thing to go, well, the price could shoot up really quickly versus your stable coin is always going to stay at $1, right? That's not going to change at all. So, but I think, in my opinion, USPC is more stable than the stable coins over the long term because we also always appreciate. We also have the rental incomes, which will be reinvested to generate company returns. So over the long term, we're going to be generate a lot more value than a stable coin, which generates no values at all.
Okay. No, that makes a lot of sense. And audience, yeah, keep the questions coming. I know we have a lot of questions. I have my questions I want to go through first, and then we'll get to yours. These are good questions, by the way. Keep them coming. So when someone buys a token, or when they give you money, you mint the USPC, right? And then you put that into these housing projects. As the houses appreciate or value comes in through rental income or whatever, what does that do then to the USPC token? Are you doing anything, or what happens?
Yeah, so because every USPC token represents an equity, right, that owns those say multifamily housing projects. Well, that means that you own it directly. There's fundamental you can analyze, right? So you can look at because we're going to publish all the financial, we're going to publish all the property we own. So you can easily look at those properties valuation as they increase. Then you can say, okay, well, here's how much USPC owns in real estate portfolio, and here's how much token outstanding. So you can easily calculate the book value for the token. And how much is traded on the secondary market is out of our control. It's really based on market supply and demand. But you can at least see the fundamentals. So that's why I keep saying that this will be probably one of a few coins you can actually see the fundamentals. And you can make projections too. You can say, oh, here's the lease agreements we have on the property. Here's inflation. Here's what we see. So we think the return or appreciation is going to be 10% next year. So you can actually project the forecast in next year's increase, right? And that's how you analyze a stock or a REIT, right? You price in whatever the future price is right now, right? So there's something you can analyze. So that's for me is I like it, right? Because there's real value,
Yeah, this is super interesting. I really like this. So a few questions from the audience. They actually have a lot of questions, which is good. It means that they're interested, If there's no questions, you're like, oh, okay. You want to talk about the roadmap and timeline? We know that when you go to the website right now, it's kind of just, join the wait list. Do you want to talk about maybe some of the roadmap?
Yeah, okay, sure. So because we are a security token, so whenever we do the security offering, we have to comply with all the security laws, right? So I don't know if everybody familiar with the securities. So the first thing you have to do when you do the first public sale, you have to basically get approved by SEC. So there's two ways to get approved by SEC. One is crowdfunding, regulation crowdfunding. You can sell up to 5 million, or regulation A, you can sell up to 75 million, or applying for Reg A and Reg CF at the same time. So whichever comes first, which is most likely be CF, will release that. So the goal is to release our first crowdfunding, which is first small chunk of token release on November, which is next month. And then next year we'll fold up with the Reg A, which is $75 million. Then we'll do IPO. We do IPO with public stock, but we're not going to be listed on NASDAQ or any other stock exchange. We'll be listed on token exchange. But then after IPO, then we can start selling the rest of the tokens with no limitations. So the roadmap or the timeline you put together is more on a project based. It's not how we sell the token. It's more like, okay, when we're going to launch the token, then the rapid growth is when we actually start raise the money, sell the token, raise the money, then start buying properties. Because buying the property takes a long time. So we're not going to have ongoing like open cards. You can just keep buying the token. We're going to issue a small chunk of token. We're going to stop it. We're going to take the time to buy real estate, because it takes time to find good properties. It takes time to analyze them, underwriting them, do due diligence, and buy them, and then put them in portfolio. And then there's a lot of work to do to buy a property. Typically, for commercial real estate, it takes about 6 months to sometimes a year to buy a property. So we have a lot in pipeline. We already know what we're going to buy, but it still takes time to finish those transactions in the real world. So the token offering we'll offer a little bit. We'll buy the real estate, then we'll come back over another. Like it'll be like in increments, right? So
okay, no, that makes a lot of sense. Do you want to talk about what's your view on real estate in general? How do you feel about the state of real estate right now?
Yes. So like I said earlier, real estate is all kind of different types, right? Say there's commercial real estate, there's multifamily, there's industrial, there's retail, there's office, right? I'm not really keen or big fan of office. After pandemic, especially people really don't need office work. Most people work at home. They don't really need office. And a lot of retail malls are suffering really bad too, because Amazon, pandemic, all these kind of things. But what I'm bullish about is industrial and multifamily. So those two are pretty big sectors, and I think it's going to grow, continue to grow for the next 5-10 years, especially multifamily. For we still have a housing shortage here. People don't have enough housing to live in, and they're whether you buy or rent it, you still need housing. And for me, like I said, I think residential real estate is more like commodity, because you don't need gold to live, you don't need crypto to live, but you can't really do live without real estate, right? Because everything we do is on real estate. Right, we live on land. Water come from land. Our food come from land. Agricultural land. Everything's on real estate. We can't really do anything without real estate. So for me, those real estate is important. It's not going to go anywhere. That's why I feel like it's one of the safest assets you can own.
Okay, nope, that's fair. And then, do investors get depreciation on the property?
No, you don't, because again, this is not a REIT. This is also okay. The corporate structure. This is a corporation, and because of the corporation, we're not elected as REITs. We don't give out the cash dividend to the investors. So we capture all the depreciations in the corporation, and of course we'll pay the corporate tax. But because of the depreciation we captured, we'll pay more minimal corporate tax, and then that allows us to reinvest those rental incomes collected from the property and into buying more properties. So the way we like to think about it is like. Yes, I have two choices. I can give out the returns to the investors, and then they can, they'll like it, the cash dividends. Then the portfolio will go really, really slowly, because we're giving out 90% of our income, and there's nothing for me to reinvest, right? So I like to keep as much as we can, because we think we can do a good job and making better returns for the investors. So I like to do a little bit differently than the traditional REITs. So
okay, nope, that's a good answer. And then we have a bunch of people asking about where are the rentals geographically? Are they? We noticed the first one's in California. Are they all going to be in California? Or are you kind of looking all over?
We're going to go nationwide. This is called the United States property coin. So we're going to go all United States. We're not going to go anywhere outside of the United States. We're going to go only US. But I'm thinking about the high demand markets. So where there's high population, dense population. So Venice Beach is the first property I built it myself, and they're actually that data's wrong. Actually, the rent is actually $30,000. So I'll have to update that one. So then will be LA, I guess, Orange County, San Diego, San Francisco. Maybe we can do New York, Miami, Houston. Those good market with high demand. So and because we would like to see the growth in the real estate, and first of all, that be stable, right? So we're not going to go to places like Detroit because it's pretty depressed. We like to own property that we know is going to appreciate for the next 30, 40, 50 years. So there's a population growth, right? Because as there's more population growth, the economy is going to get better, then the rental income, the risk appreciation is going to get better. So we're choosing those in markets based on their population growth, on their on the job counts, everything. So
Sure. Okay. Any plans to come to Lincoln, Nebraska? That's where I'm at. So
right, yeah, if there's good growth, why not, right?
yeah, yeah. And I will say too, from my experience with real estate, one advantage into coming into something like this, I mean, it's the same advantage with REITs, but you have way bigger margins when you can get into bigger properties like this. Whereas you as an individual investor might not have, millions of dollars to put into properties like this. But if you can get together with other people, you can get into them and, partake of the bigger, the bigger spreads that you have on these. So that's my experience. How old is the portfolio? When did they purchase the rentals? Who do they use for a rental management company?
Is it especially for this property?
I guess so. Is this the only property that you guys have right now, or is this the
Yes, this
first
is our seed
property?
asset. So we actually built it ourselves. It's built in 2019, so it's really new. We built it from ground up ourselves. Premier is my US development company that currently manage it. So we built it, we managed it right now. So we
Okay.
contributed the property to USPC this year. So this basically is new to USPC as a seed asset.
Okay, good. I think that answers the question. Okay, that was another question. Do they own the property outright, or is there a debt load that the underlying company carries?
There is a debt on the property is under 50%. So that brings back to the more that I'm saying is because I want a safe investment. So I have a general policy is no real estate holdings will ever have more than 50% leverage. Every leverage will be under 50%.
Okay. And then Keith says, sorry if this has already been asked, but are you looking, what type of buildings? Is it mostly apartment that you're looking into, multifamily, or just kind of whatever you guys see?
I would say that also majority of investment will be focused on multifamily, and will be looking at other asset classes that say that we feel safe because the goal for the U.S. investment strategy here is providing maximum safety, not maximum returns. Because right, you can get a lot more returns if you do vacant land developments. That's what I do actually the most. But in USPC wise, we like to do safe investment. So for me, I think multifamily is one of the safest assets I can hold. So what we're definitely very interested in multifamily, and we're probably not going to buy any retails unless it's really good location, has really good tenants with a good market. Like say, if South Coast Plaza is ever for sale, we'll probably want to buy them. But so office wise, probably not. But medical office, we'll consider medical office. Those are really good assets to hold because doctors always pay their rents. So
Yeah.
and industrial will be a good one too.
Okay. And then who holds the deed? Is it an LLC, or is there an umbrella company that, which entity does the coin hold?
USPC is a corporation. It's called the United States Property Inc. in Delaware. It's incorporated in Delaware. It's a C corp that would directly owns LLC. 100% owns solely subsidiary LLC that owns those title of the deed. So right now the Venice property is owned by LLC that's wholly owned by USPC. Right. So United States Property Coins.
Okay. Good. Yeah, and we're just rapid firing these questions, plugging through them. But does this mean that we will KYC and report to the government on the holdings?
Yes. So that's another thing I wanted to talk about technology part, which is a good question that I actually didn't touch base in there. Because we are a regulated security token by SEC, we're not just like any other coin. So there's one thing we can do, which is fully decentralized anonymously, right? So I need to know who they are, right? Who my investors are. So I have to KYC everyone. So what I did is I actually asked my developer to do a new token standard called the ERC 1400. Is a standard. We actually modified it a little bit. So that allows me to basically build in the KYC in my smart contracts. So everybody who transacts on the token has been KYC'd. So I know who they are. We're compliant with the law. So right, because both ARS and CC were very much likely to want to know that who you are and if you made a profit on it or not, right? By trading it. So we have to do that. Yes.
Okay. And then is it possible to get in as a European?
Yes. So because there's an exemption called the Reg S allow us to sell to foreign investors. However, there's restrictions. So when we sell to foreign investors, the shares cannot flow back to US for a year. So that's another part is we're able to actually put a restriction on the token that's sold to foreign investors. So the share cannot be sold back to Americans for a year. And after that year, the restriction goes away.
Okay. All right, and then if a company like Fundrise, so one of the REIT companies or crowdsourcing REIT companies, if they decided to come into the blockchain, what would differentiate USPC from what they're doing?
Um, okay, I'm actually familiar with Fundrise, right? They do a lot of Reg A's. They have probably 10, 20 different e-REITs, LLC. You can buy with $500, $1,000, and choose have dividends or not. The different part is like for example, on the tax part, their LLC, their partnership, I don't think they allow foreigners, so only American buy them, and then if you buy them, they'll give you dividends, right? And you have to pay tax on dividends, and there's a drip system you can choose. It's like a dividend reinvestment system program. You can actually choose to reinvest your dividends, but you still have to pay tax, right? Because dividends already gave it to you. So there's a tax part, on that, and also that their investment strategy is a little bit in the mind. They do a lot of debts, like fixed income debts investments. I like to do equity. I like to buy equity, buy property, have an ownership, and then hold it long term. They do a lot of debts. They also do other investment, but I would say they're more of a fund manager instead of operator. I came from a developer operator angle view, so I like to own the property, and I know how to operate them. I know how to make them perform better. Where Fundrise is more like a money manager. They put money together. They invest in other developers like me, or they actually mostly through debt instruments. So that's the most different part. And they're, again, I'm not be too cocky to say they make good enough money as a fund manager. I'm not sure they'll be coming or even want interest in coming to blockchain market anytime soon. And even the decided to, it's really hard to actually fund the developers and be able to do that. And for them, you understand the blockchain, right? The technology for them to even to be able to do the smart contract, everything. That's kind of like another world, like, because you have to involve a lot of technology part, which I spend a lot of money on them. So
Right. It's almost like, yeah, they Fundrise is doing what they're doing, but you almost would need a whole separate company to go over to the blockchain. Like, it's a completely different thing,
yeah,
and there's a lot of work that goes into that.
exactly.
How can people think through? So a bunch of people asking, what kind of returns should investors expect? What's the best way to think through that? And I just want to kind of show. So I'm just on the Fundrise website. So like
Right.
they're given 5.4%. Most REITs are doing very badly right now, I noticed too. How should people think about like what kind of returns they might expect?
So I like not to project the returns, right? But let's say for really quick example, Venice Beach, right? The cap rate is about 3% and the cash on cash returns right now. And with the real appreciations, that which it really depends on the inflation, right? I'll generally think their overall returns will be 8 to 12% generally, average portfolios. And then because of the compounding returns, so the longer we hold it, they're higher the returns. So we hold it over 10 years, over 20 years, it's going to be fundamentally different. If you use a compound interest calculator, you can see the returns will be so much higher because we're able to capture the returns and reinvest them, right? So, but again, like, because we are traded on the secondary market, I don't know how the secondary market is going to perform, right? You could trade 3, 4, 5x, or you could trade 80 cents on a dollar, right? So I don't know how the secondary market returns are going to be. All I can say is my investment strategy is really safe. So, and it will also, the longer we hold, the higher return we have. So I mean, if you think about USPC as somewhere you feel comfortable to put a savings on, and that's the best way to do it. You don't want to. I don't want you to come here and say you think you make a lot of money in the short term, right? That's not the goal. I mean, the goal is to put your free money in USPC and store the value there, let it grow. If you need to use it, because of blockchain, you can actually sell it and liquidate. So
Okay, nope, that makes sense. Yeah, the goal is it's not get rich quick. Like you said, you'll have a bigger opportunity for returns if you just go buy an empty lot and do a construction project or something like that. But this would be like a safer real estate strategy. So that's kind of what you're getting into.
exactly.
And we have a ton of questions from the audience, which is really good. It means that people are interested. What percentage of returns go to the team expenses?
Oh, okay. So this depends. When we first started, of course, a big chunk of it is going to go to their expenses, right? But then as we grow, then the very small chunk will goes to their operation expenses. The operation expenses is pretty much really minimal because USPC is more like a holding company. So we just going to have some key managers to manage the property. Most of the property will be managed by a property manager, right? So the key team, I like to say we're not ever going to go over 50. So we like to stay with a small team. Doesn't matter how big the portfolio is, right? So, but again, at the beginning, of course, right now, the big chunk of the rental returns and goes to the operation expenses. Because we still have a lot of expenses you have to cover: the legal expenses, right? The accounting, auditing expenses, technology maintenance expenses. I mean, that all comes with it. So
yeah, and if you've never been into real estate, will surprise you how many expenses there are and how difficult of a process it is. That's why something like this is attractive to me, because I just don't want to mess with all the stuff that goes into real estate and finding the property and all that. And so if I can have you do that and I just give you money and I get to share in the returns, that's way easier for me.
It's a full-time job. I mean, you don't know how many times, because my company also help other investors manage their property. There's so many times that we're having investors come to us. There's smart people like doctors made a lot of money, came to you, hey, can you help me fix it? It's all messed up. Accounting messed up, the leasing is messed up, all the lease terms are bad, the property deferred maintenance. There's so much work that goes into a property. You're right. If you are not expert in the field, the best way you keep doing what you do the best, and then let the other people who manage real estate manage it for you.
Yeah, and I have horror stories of you have a difficult tenant, and then you hire a property manager, but then you have a difficult property manager, and then they can't get along with the tenant, and then it's a huge nightmare. All for like you said, a 12% return, and it's just when I got into crypto, I was like, real estate just is not worth the trouble anymore.
That's true.
I'd rather get into crypto stuff. Let's see. We talked through that. Just to verify, and again, we talked a little bit about this, so you don't have to go into it a lot. And by the way, the replay of this will be available right when we're done if you miss questions. But will there be dividends to stakeholders, or does it all just go to token value?
So we'll issue dividends in USPC. So there'll be no cash dividends. We talked about this earlier. Like you keep all the cash you reinvest to generate these compounding returns. So, but however, we'll issue the dividends in token. That means, this is more like a stock split, right? So the token value will drop a little bit, then everybody have more tokens in your possession, so you can actually use them. Actually, we don't have to do that because one thing, a big part about between USPC and the stock is non-dividable, right? You have one stock, that's it. Maybe you can divide it a little bit with a brokerage, depends on which brokerage allows you to do that. But because USPC is a cryptocurrency, you can divide it just like Bitcoin. You can have you can own 0.0001 of USPC, and you can still spend it. So we don't have to give out the stock dividends like a USPC, but we're doing it right now. But it could change in the future, right? But however, the most returns is captured in the stock in token value.
Token value. Okay, and then just so I'm clear, as a non-US investor, should we purchase the USPC tokens and then we're unable to sell them for a year, and we have to KYC as well? Is that how it works for non-US?
Yes, everybody have to be KYC because we'll have to do anti-money laundering list check to make sure that you're not on the unwelcome list of the United States. Say if you're Russians right now, you probably can't buy them, you can sell them, but you can't sell back to U.S. investors. So if you're a foreigner, you bought it, then you can sell to other foreign investors. You cannot sell back to U.S. investors. That's just their SEC regulation that we have to comply with. And you don't have to know who their recipients are. You just have to try to send it. If it fails, that means the recipients are Americans. If it's successful, then he's foreigner. Because we're able to build the whole thing into the smart contract. So the system on blockchain would actually check every recipients against the whitelist on the blockchain to see if they're KYC'd, and also to see if they're a jurisdiction in the US or other countries.
Okay. We have so many questions, so we'll get through as many of these as we can. I definitely don't want to go longer than an hour. So if we don't get to your questions, on the website, there's a link to Telegram and a link to Discord, and definitely hop in those. I'll post a link to the Discord. Is Discord the best way for people to kind of ask questions and get more info?
Yes, Discord will be one of the best way, or you can email us.
Okay, so I'll post a link to the Discord, but we'll get through as many of these as we can. Are you planning on most of the properties being flipped, or are you planning on renting out, or is it going to kind of be a case by case?
I would say in general, like most of the case, we're like to hold the real estate as long as we can, because I always believe in strategies like buy real estate, never sell, right? That's always my biggest strategy. Because real estate always appreciate. What are you gonna do? You're gonna sell real estate. You're gonna pay tax. You have to find other property to buy with your cash available on hand. And most of the cases, you can't find them, right? You can use the thing to quote 31 exchange. Or you have 45 days to find the property, and most likely you don't find the property as well as the one you just sold. So I like to keep the property as long as we can, just rent them out and just enjoy the appreciations, right? The longer you hold the real estate, the better. And plus, some of the property I really value, but say we're able to buy a good trophy asset in good location, we never want to sell them. We want to hold them for decades, never want to sell them. Because once you sell them, you can't ever buy them back, right? And there's a way to get returns out of the property, though, because the rental income is always increasing every year. There's also, you can refinance, because when the property is appreciated, we'll actually refinance, say, every 5-10 years. Again, we're not going to ever refinance over 50%. So we're still really safe. So if the market hits and there's nothing goes wrong with it, and then under 50% leverage allow us to have enough cushion to basically make sure the assets is still being safe, even there's change on the market, right? So
yeah, nope, that makes sense. Has rising rates been fearful for you guys, or how have you adjusted to the rising rates?
No, because then we'll have the choice just buy the property out with cash, right? We don't have to finance, right? If the debt's instruments, because people use loans to leverage the returns. I say if you're making, say, 5% returns on your mortgage to 3%, of course you have the 2% spread you can make. It makes sense, right? If your returns 5%, your interest rate now is 7%. It makes no sense. So why do we even get a loan? We'll just buy property with cash, right? We just hold it, and then when the loans get cheaper, we can refinance later.
Refinance, yep, nope, that makes
sense.
So
we're never going to go over 50%. That means we're always going to get the debts. So we can always buy a property with all cash and just hold it.
Gotcha. So you won't go over 50, but you will go below 50.
Yeah, well, we'll go below 50.
Yeah. And would there be a minimum and maximum investment expectancy?
So it depends on the offering, right? So I like to keep it as low as possible. There's no maximum, by the way, but there's so I like to start selling USPC at $1, right? And then the minimum will be probably $100 during the crowdfunding, and Reg A will be $100 investment.
Okay, that makes sense. And no maximum. So $100 minimum, no maximum.
Well, however, there is maximum. So sorry, I'll take you back, because if our regular investors, you're buying through Reg A, they have to check your income, right? So if your income is less than $100,000 a year, you can only use 5% of your income to buy them. If your income is over $100,000, you can use 10% of your income to buy them, and that's most you can buy. That is actually maximum for regular investors. If you're credit investors, there's no maximum. Or if you're foreign investors, then there's no maximum.
Okay, so that's a good clarification. So if you're not an accredited investor, it's 5% of your income is the most you can do, or
5% of your income, or your net worth, whichever is higher. If your income or net worth is on $100,000, if you're over $100,000, then it's 10% maximum.
Okay. And accredited investors can do whatever they'd like to do, correct?
Yes. So, because they're not as protected as by SEC, the SEC don't really care about them. They say, okay, well, if you're a credit investor, you have enough money. So if you decide to put all your money in, then that's okay. So.
Yep. Nope. That makes sense. And then, so Ian would like to know, with construction inflation, Symphony Estate is 10% of Primer's portfolio. How exposed is USPC to taking the hit on cost overruns on wide projects?
Okay, first of all, I want to clarify, Symphony has nothing to do with USPC. Symphony is a custom home we're building, and is never going to be enrolled into USPC because it's not a rental property, right? So it's not even the same asset class. And USPC is not doing any developments, and so the cost overrun under constructions, right, on the labor things is never gonna hit USPC, because USPC is never gonna buy anything that's on developments or anything. We're only gonna buy stabilized property. That means the property are built, completed, with tenants in there, right? So that's the only thing USPC will buy. So you don't have to worry about it. And actually, when inflation goes really high, a lot of people are probably getting forced to sell their property or being foreclosed. This will be a good opportunity for USPC to actually buy them, because we can buy them, 80 cents on a dollar with a big discounts. That would be a good time to buy, actually, in the next maybe 2 years.
Okay. And then Liberté, hopefully I said your name right. But do you ever plan on going outside of real estate, like maybe get into hotel or guest house or other things? Or is your plan just to get in real estate, and if you hold long enough, it should be good no matter what the market does?
So I would say I would consider hotel as part of commercial real estate. Is hospitality is also considered part of real estate, right? So probably not guest house, but hotels would definitely be interested about. Where I'm a little hesitated buying the commercial hotel because they got hit really hard by the pandemic. I would buy their hotel. If I'm ever buying a hotel, it will be the lodge, right? The lodge always perform really good during the pandemic. Also, their high-end experiential hotel like Four Seasons in Hawaii, because when it's lockdown, people still spend a lot of money traveling for leisure type of property. So those are still performing really well. So we'll consider doing that. But again, I would say majority of our focus still be on multifamily because we're thinking that's really where people are gonna need. That's the most safe asset we're gonna have. So.
Okay, very cool. Yeah, and again, if I don't get to all your questions, I posted a link to the white paper, and I'll post it again because the white paper is very good. White paper goes through a lot of things. It's not a typical crypto white paper. It actually has good information in it. Crypto Pirate would like to know, where does the buying pressure on the token come from? Unsure how the real estate income translates to increased demand on the token.
Okay, the buying pressure on the token come from.
So I guess he's kind of wondering, how does income from the real estate increase the price of the USPC token? So if you're buying the token, how are you making money?
Right. So you know what? That's more of a secondary market question, trader question. I don't know how they value those token price based on their rental income value from the real estate. I'm a real estate developer. When I do investment, I do mostly primary investment. So what I focus on is fundamental value. Now, how do we generate value right out of the property and so we're focused on the book value of their USPC, right? So and how they perform in secondary market, that's really deep on the market and how things goes. I don't have any comment on that, unfortunately.
No, that's fine.
I'm not expert on trading.
Yeah, no, that's fine. And, in a lot of ways, it's similar to the stock market, right? Like Tesla releases an earnings report, and then how that affects the share price is going to be, you can't control that. Like it's
right. It depends on people's, intake on the news, right? They think it's good news, then they're going to buy more. They don't think it's good news, they're going to go down, right? Or you can have things happen like a GME. People just like the stock so much better. Just keep buying them. Doesn't matter what the financial says, right? So I really don't know how to answer the question because I'm not a trader. Plus, look, nobody knows how the market is going to perform.
Right.
But I would say that though, because USPC has limited supply, and we're only going to release USPC in small increments, so there's always going to be a limited supply on the market. So that could somehow contribute to some of the price increase in the short term, right?
Yeah.
But over the long term, I still think people should look at the fundamental value of the property that owned by USPC.
Sure. And some of it's hard to predict too, because we don't, like you said at the beginning, we don't have a lot of other cryptocurrencies that have assets underlying it. And so it's hard to tell exactly how this is going to function compared to other cryptocurrencies. We can look at stocks, we can look at REITs, we can look at crypto, but this is kind of a unique thing that we're not seeing a lot of. So it's hard to know exactly how it's going to do. So makes sense.
This is probably one of the very few first real estate merge with blockchain. So I don't know how they're going to perform myself, but I'm just focused on fundamental value because I think over the long term, doesn't matter how the short term price fluctuate. People over the long term, people are still going to look at the fundamentals. Right? Yeah. That's why I don't understand the other currency because I don't see fundamentals on them. So
yeah. If you're a traditional degen crypto guy looking for the 1000x, this is probably not the right investments for you, I would say. So this would be like a more of a long term. Just think of it as you investing in real estate, but in an easier way to get in. Will you guys be looking into any short-term rentals like Airbnb?
No, because the short-term rentals require a lot of management, right? Because you're basically running them daily instead of monthly, and so we like to keep on the long-term rentals. However, we are open to operate, like say to partner with other operators. Say we have a large portfolios. Someone want to come in, hey, look, I want to lease all your property on a master lease. I'm gonna then turn around, rent them daily. That's fine. That's up to you, right? As USPC, because again, I don't want to have a big team to manage everything. I like to keep a small team, keep the overhead low. So our goal is to buy a property and with less headaches, right? So we're buying multifamily property with a long-term lease, and we'll have a property manager manage them. So
Okay. Nope, that makes sense. And then let's see. If something happens on the blockchain, like a hack or funds get stuck in smart contract, can investors get their money? So how are you on the security side of
That's
the
a really good question. So I like to say is whatever happened on blockchain is never going to affect your money. The reason being is uh, your value is stored in real estate. In the real estate in the United States is not stored on blockchain because we're not just like a smart contract. That the smart contract is pretty much where your money is stored. We're not. We're using blockchain technology as a tool to make real estate more liquid, right? So you can trade 24/7. You can peer to peer where you can do the regular stock. That's all the blockchain technology offers you. But if something crashed, so we can be on multiple blockchain too. If something crashed on say Ethereum, which I don't think unlikely can happen, but if that does happen, it's okay. We still have all your data there. We know who you are. When the things restore, we can just give you a new stock, or you can go to the other blockchain, give you a new stock. We're using blockchain more of like a ledger, right? So to record all shareholder information, the transactions, we're not really using that to store any value. Your value is really stored in the real estate.
Okay. Nope, that makes sense. And then is part of your personal plan to develop properties and sell them to USPC? Is that part of what you're going to be doing as a developer?
No, because like I said earlier, Symphony is not going to be sold to USPC. However, I do have other properties. Say I'm building a property in Santa Ana, California. That's 180 units apartments. Like so, once that's built, yes, it's possible to be acquired by USPC. But again, the plan is not for me to build a property to fit in USPC because I can never build a property fast enough because I think USPC will go much faster than my development company Premier. So we'll be able to we'll have a lot of basically pressure to use those funds we raised by selling the token to buy other properties. I don't think Premier will ever be able to catch up with the demand of USPC has.
Yeah, no, that makes sense. And then maybe last question, and then we'll talk about how people can get involved. And you already talked about this, but we just had a lot of people asking, so I'll just kind of re-ask it. But how would this project be better than a traditional REIT?
Right. So I have the charts. If you guys are interested, you can look at the charts. So by comparison, though, a traditional stock and first of all, your stock is owned by the brokerage. You have a claim against it. You don't really own it directly. And if you want to sell them, you have to sell them on the stock market, and they're Monday to Friday, 9 to 4. Then takes 2.5 days to settle, and you get the money back from brokerage. Then if you want to send your money, say to your relative in Australia, you do international wire, costs you $50, take 2.5 days, right? So that's how long it's gonna take you as a traditional stock if you want to do that. And USPC is on blockchain, so it's 24/7. You actually owns it in your own possession, right? And you can send it peer to peer. It arrives in like less than 10 seconds. So fundamentally, it's more. I'll say it's more liquid, a lot more liquid than our traditional stocks, which is actually the stock, right? And again, structure-wise, REIT is a tax status. They give you 90% dividends, and you enjoy the tax. Like basically, you don't have to pay corporate tax; you pay the personal tax. As a USPC, because we don't give you cash dividends, you pay no tax. So you never get K1 from us, or you never get 1099 from us because we're not going to give any dividends. So you're not going to get any tax. You don't have to pay any tax basically by your holding USPC. However, if you sell them, you made a gain, you will have to pay tax. So that's a big difference between that.
Okay. No, that makes a lot of sense. Okay. Well, I think that's all the questions that we have for you. So the final, most important question is how and when can people get involved in this?
Because we're a security token, we're not allowed to pre-advertising it. So this is just strictly more of sharing value of USPC. If anybody who's interested in buying them, the best way is to join our wait list. When the sales available, we'll let you know. The launch is anticipated at November, but we don't know the exact dates because again, we'll have to get SEC approval for that. So we'll notify you when things are ready. You will be basically buying from our website, but just sign up and we'll notify you.
Okay. Yes, and just so people understand, since they're going the direction of they're working with the SEC. Most crypto projects are kind of like trying to skirt around the SEC and things like that. USPC is just going, hey, let's just work within their rules. So you have to be a lot more careful what you say, and things like that. So for now, join the wait list is probably the best thing. Hop in the Discord, and research, learn about it. This is something that you want to get involved in, and then just kind of wait. And you can follow me too. I'm going to be keeping my eyes on this, and this is something that I would love to be a part of going forward. So that's the best way I think for people to get in touch. And Funny Turo says when Lambo, but that's definitely not the question we're asking with this project for sure. So this was super helpful for me. I think this is fascinating, and I love to just see more. I love to see real world connecting with the blockchain and the technology being used for something. So I want to first off, thank you audience for showing up and answering or asking such great questions. Again, like Jonathan, I know you're a real estate expert, so you have better questions than I do. I have some real estate, but I'm not in it every day like you. So I appreciate you guys. And Johnny, thank you for coming on and for answering questions and presenting what you're doing.
Oh, thank you so much for having me here. I'm really happy I can answer all the questions. It's a really good thing to see all these questions asking. I mean, people have genuine interest in USPC. Appreciate it.
Yeah, no, it's awesome. And yeah, reach out as you have announcements and things like that. Let me know. I can get tweets out. I can let my community know because there's obviously a lot of people interested. So I would appreciate that.
Definitely will do that.
All right. Thank you. And thanks all you audience. Please hit like on your way out, and we'll talk to you all later.
Thank you.
Thanks, guys.